Greetings traders out there in Traderland. My name's Dez here at Grok Trade, and this is the weekend edition. This weekend edition is good through Sunday, January 6, 2013. And there's a special little talk at the end of this video and an invitation, so make sure you stick to the very end. Take a look here at the markets. We wrap up on Friday. Check this out. Bullish territory. Actually, the S&P closed at the highest level since December 2007, up 0.5%. The Dow up 0.033%. Nasdaq up just a fraction. Russell's up by quite a bit, up almost 0.75%. And we have the banks up 0.7%. VIX up by 5%. Check this out. We're below 14. We had a spike and come right back down. Interesting. Gold gets slammed again, off by 0.5%, but silver rallies up 0.2% after yesterday's or Thursday's big drop. And crude oil up 0.41%. Break even here on the U.S. dollar. Big pop here on transportation index. Look at this, up 1.2%. Very, very strong on Friday's close. Here is the all-important S&P 500 chart. We popped up today. This is massive, gang. Let me explain this to you. This big chunky blue line goes way, way back to that 2007 area. Right here, October 2007. It's went from that close to this close in 2012. Okay, so that's where we get this line coming across. Well, a few days ago we went above it. Rounding out the week, we played around with it, and then Friday we popped. But check this out, we have a close for the second time above this major trend line. That is huge. Check this out. I did draw a minor trend line that's going from the shadows down. We're not past that yet, but the odds are in the favor of continuation here. This is great news. See the two blue lines here? See the moving averages coiling together? We have symmetrical triangles. Symmetrical triangle, this one did break out to the upside, was challenged by this major trend line, now showing a puncture taking place. This is hugely bullish for the markets. Keep your eye on this. Now on the weekly chart, it is confirmed. Big rally for the week. Big rally. We did pierce a major trend line. And if I really blow this up, you'll see we got a close here above this swing high. Really nice to see. A lot of upside potential here, gang, on the weekly chart. On the monthly chart, so far, we're just getting started in the month. But check this out. A close, or not a close, but a high above this trend line, this main trend line coming up, a high above this. Really nice, a lot of upside potential here, so something to be watching for. We could be at 1550 on the S&P before you know it. Last year when the market started off this strongly, it had a lot of follow through, so something to keep a watch of. Now let's take a look at the NASDAQ. It's starkly different than the S&P. What's interesting here on the NASDAQ, we had this choppiness taking place. We had this broadening formation. You can see this here, broadening formation, which with a massive gap up to start off the year. Check this out, this major trend line that goes way back here to, this puts us here in 2011, November, and then this puts us here June 2012. We hung up here, now it's resistance. We gapped up above that area. So long as it can gap up above it and stay above this, this is really bullish. If it starts to drop below it, that would be no good. Keep your eyes on this. Let's go to a weekly chart. Weekly chart looks really nice. We came up high based right below the 20-week moving average. We broke out and got above a main trend line. We still have another trend line to deal with here. I'm going to redraw some of these lines. This line actually I would put now right here. So we do have a lot of upside potential on this one. And now that this is busted for the week, I'm actually going to make that much smaller, not so dominant. So let's look at the monthly chart. The monthly chart here. This is a major, major trend line coming down, going way back to right here, the year 2000. This is the year 2000 coming down. I got resistance here. We are now above that area. Really good to be above that 3100 mark. We're there. As long as we can find support there, that would be great. Upside potential here. Let's take a look at gold. Gold's been under a lot of pressure. However, I'm going to show you something here. We have massive volume coming in, unlike the S&P. By the way, the markets on this rally last few days, especially on this breakout that we're seeing, happened on pretty meager volume. The volume is not overly impressive. Keep watch for that. Now going for gold here. What's interesting, we have a support level right here. We had this massive gap down. We have a run up on major volume. This could be a buying opportunity for gold right now, gang. If you did not get in on Friday, there may be some ups, another opportunity to get in. But I think any buy around 160 might be a good buy. If you look here on the weekly chart, we're finding a little bit of support here coming across 100 moving day. This is the 100 week moving average acting as support. We could see some upside potential here. Be watching that. And on the monthly chart, we just have this little triangle taking place with a bull pullback. Not too bad. If actually I might do a little Fibonacci retracement to see what level we're at. Yeah, finding support at the 61.8 Fibonacci. As long as we can stay above this green line, 61.8, which put us, as long as we can stay above 158 and some change, this could be a really good buying opportunity. Looking for a breakout to the upside. Let's see what Apple's doing. Here's the monthly chart on Apple. A beautiful bull pullback to the rising 20-month moving average. On the weekly chart, it showed some strength for the week, but then gave it all back. Low base formation, so that's not so hot here, gang, for Apple on the weekly. On the daily, what's horrible here, we broke out of this falling wedge. Everything looked great. But Friday's action brought us back into the falling wedge, which is not good at all, and it did it on an uptick on volume. We do have a little bit of support that's coming into, but it closed below the 20-week moving average. Apple seems to be in a little bit of trouble here, so something to be watching for. Now the VIX, Volatility Index, this spike going into the close of the year, and then this major drop taking place back into complacency areas. On the weekly chart, you can see this. We popped up, hit our head at the 20-week moving average, and then dropped back down on the week. And then the month, we're just way down here at the area. I mean, look, we're coming to some support areas, gang. So be watching this. Usually when it gets this low, it will either stay there a long time, or you'll see it do a touch and go, like this one. Touch and go, touch and go, touch and go. So let's see what happens on the VIX. Now, let me get to my little message here. Here is the message. You might have seen this picture before. It's fairly popular picture. It's done by an artist here. You can see his name down in the corner. Give him kudos. But what it is grizzly bears, Papa, Mama, and some cubs. And what's interesting here is it usually takes Papa and Mama to teach the cubs how to catch salmon. And it's really important for the bears to fatten up before the winter time, and salmon gives them all the fat that they need. Well, the problem is if the cubs decide to try to learn to catch these themselves without the help of those who have been doing it for years and learned it from others, it's really tough. And the reason I bring this up, and I want you to think about it, is that it is impossible to get to where you need to be and where you can be in your trading without formalized trading education. Chances are really good that you have not had any formalized trading education before. It is imperative, and it is absolutely the most important thing that you need to do for yourself in 2013. Regardless if you use us or not, you need to get formalized trading education. Now, I'm biased, but I'll tell you this. No one can compete with the tuitions that we charge here. It's online. We keep our expenses very low. We don't have the names like the Robert Kiyosaki's and the Teach Me to Trades, Better Trades, Wise Trades, and Optionetics, and all these different companies. However, I did teach for Robert Kiyosaki, the Rich Dad Poor Dad, Teach Me to Trade, Option Success, Star Trader, and some others. So those curriculum that we have put together is paramount over those that we taught before. It is something that we do and we take very seriously. So my thing here is to help encourage you for 2013. Let there be a resolution to trade better. The only way to trade better is to get formalized trading education. We can do that for you. But anyway, if you want to hear more about that, show up on Tuesday night. We're going to be doing a free class. In the latter part of it, we'll talk to you more about the mentoring program that we have. Hope you can join us. Take care, and thanks for being a part, and share us with a friend.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. They kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.